Hello, hello. My name is Becca and I use she, her pronouns. I'm one of the associate directors on the community success and engagement team here at B Lab US in Canada. And I am thrilled to welcome you all to today's Impact Collab, which is on foundational requirements and certification next steps. So first I want to cover some quick housekeeping before we begin. Closed captioning is available on the call. And you can control this and how it appears on your screen by clicking on the CC button in your Zoom control bar. We will be recording today's call, and we'll be sharing that recording in the follow-up email and also uploading it into the Beehive after today's call. And then finally, if you would like, please update your name in Zoom to have your name, your company name, and the pronouns if you'd like. Before we get into today's content, even though we are all dialing in virtually, it's important for us to acknowledge and honor the ongoing stewardship of this land by Indigenous peoples. We have much to learn from Indigenous communities that have lived on this land since time immemorial. I personally reside on Lenape land, and I encourage you to share in the chat whose territory you're joining from. As you may know, today's webinar is one in a series of Impact Collabs where we covered each of the new impact topics from B Lab Standards V 2.1. And this is the final Impact Collab of the year. Yay, celebration. I'm curious in the chat if anyone has happened to attend all of them, because then you are an absolute all-star. But also, do not worry if you are new to the party. We're excited to have you here. And you can find all of the recordings and resources from previous calls in the Beehive or on YouTube. We also have immersion courses on every other impact topic, and we encourage you to take those to go deeper at your own pace, and we'll send links to those in the follow-up email after the call. Okay, so we do have a lot to cover today, but I want to quickly review how we'll be spending our time together. So we're going to start with an overview of the foundational requirements from Austin, Holly, and Grace. Then we're going to shift to hear from Eric on the assurance model. And then Manuka is going to share with us the setup process, the certification setup process. And then we're going to go into Q&A. That'll be at about the hour mark, just for everyone to have time awareness of how today will go. And please make sure you submit your questions in the Q&A function on Zoom. And then I'll close us out with some quick reminders of resources and some calls to action. And our goal today is to do an overview of the foundational requirements, the assurance process, the assurance model, and the setup process. And we'll begin answering some general questions. We're not going to be able, just because of time allocation, to go into every single detail, but we really hope that this is a helpful start. And again, that we're going to leave you with resources, and again, so you can kickstart a little deeper dive after today. Okay, so we've got a lot of content to cover, as I said, and I'm really excited to have all these amazing speakers with us today. So thank you to Grace, Austin, Holly, Zach, Manuka, and Eric in all you've done to prepare today, but also in showing up today to share your wisdom with everyone that's joined us. And then before we get into the impact topic, I do want to share some info that will be helpful to you in understanding the new standards in your company's context. And the first is that in the new standards, company size is determined by the number of workers or revenue, whichever is lower. This is an update as of this very month. It was previously whichever is higher, but I do want to highlight it is whichever is lower. And I've shared a knowledge base, or our team, thank you, Sylvia, has shared a knowledge base article in the chat in case you wish to reference that later. The last piece of context for you in thinking about the standards, and you'll hear us talk a lot about, is year 0, year 3, and year 5. Year 0 requirements are those that need to be met by your company's initial certification, whether you're a B Corp or not. Year 3 are requirements that are required by year 3, and year 5 by year 5. At each of those years, you'll need to meet the previous requirements. So at year 5, you'll be meeting year 5, year 3, and year 0 requirements. Generally, for foundational requirements, all of these must be met each time, but there are some nuances to that we will be sure to cover in today's call. Okay, so what to expect today. During the Q&A, We do have some pre-submitted questions that we will get to, and we are very much hoping we will have ample time to also do live questions. But I do want to note here that we may not be able to discuss a question that is very specific to your company because we will be prioritizing questions that are relevant to the majority of attendees. And you can always email your questions to us, but I am hopeful that today's session will clarify quite a lot of things. And again, you can also post questions in the Beehive group or email us at community@bcorporation.com.net if those questions are not answered today. As we said, there is a lot of content today, and we have attempted to jazz it up with some fun case studies, as some of this content is a little bit dense. And while sometimes in general receiving a lot of new information at once can feel overwhelming, perhaps particularly this content is a little dry, or some have even said foundational requirements feel like they're framed in somewhat of a negative light, this is only because we are seeking to make it crystal clear about the parameters about what it means to be a B Corp in this moment. Who has the ability to represent the B Corp movement, and who may still have work to do before they get that honor. I want to call in energy of Impact Collab speakers past when the CEO of CapEQ spoke to this idea of the sentiment behind these updates. In this session, we will be spending a lot, and I mean a lot of time, getting into the nitty-gritty of these requirements. And sometimes it seems in the greater business world, and specifically in this content, that it seems like we're approaching impact work from this highly or purely risk mitigation standpoint or regulation compliance perspective. But behind this, and in general, behind the shift to version 2.1, is that this is core to the movement. It is the ability for us to collectively represent what it looks like for businesses to be united in the belief that there is a greater responsibility that they hold. And in stepping into this responsibility, which isn't always easy, is critical, especially in this moment. Okay, so I wanted to ground us in that before I pass it over to Austin, who will start to dive into that nitty-gritty. Austin.
Thank you, Becca. Hello, everyone. I'm Austin with B Lab US and Canada, and I'll spend a few minutes doing an overview, but let others dive into the details on the foundation requirements. So the foundation requirements, it's in the name, right? These lay the groundwork for what it means and how to qualify to be a certified B Corp. There's three elements. We have eligibility requirements, legal, and a risk profile. We'll go through each. And much of this is being carried over from our previous standard. It's just more explicitly spelled out now and will be one of the first things a company can navigate. And why have we done it this way? Just to ensure that all B Corps align with the movement's core values of transparency, accountability, and stakeholder governance. Okay, so as I said, there are three requirements in the foundation requirements. The first is all about eligibility. There are a handful of these, and I'll cover those on the next slide, and I'll have Grace go into more detail on one particular element of that. FR2 is the legal requirement, and Holly will talk about that later. This requirement remains the same as our previous standard, and given that you all are already certified B Corps, we didn't feel the need to spend too much time on this legal component, but Holly will reiterate why the legal component is such a critical pillar in this movement. And FR3 is the risk profile, and it will go back to Grace to cover that one. That's an adaptation of our disclosure questionnaire from the previous standard, so you might recognize some of that. All right, let's talk about FR1. And there are 5 elements to this. So the first one, FR 1.1, is all about, being, again, these are all eligibility related, right? So it's being an incorporated business entity in operation for 12 months, generating a majority of revenue from a competitive marketplace. This one also spells out what entities cannot be certified, such as a government agency, nonprofits, amongst others. FR 1.2 covers involvement in industries that undermine the B Lab theory of change. So this is the one we'll spend a bit of time on. I'll let Grace dive into that in a minute. FR 1.3 requires companies to comply with local and national laws and regulations. 1.4 requires the company to share accurate and complete information. And 1.5 requires the company to be transparent about its performance on the standard. So most of these are relatively routine, other than 1.2. So I'll now pass it to Grace to dive into that one.
Thank you, Austin. Hi, everyone. So nice to see you all. My name is Grace Sun. I use she, her pronouns. So I'll go a little bit into more detail on FR 1.2. The company is not significantly involved in industries that undermine the B Lab theory of change. FR 1.2, as well as all the other foundation requirements, are applicable to all companies in all sizes and sectors. But really importantly is FR 1.2, we are giving certified B Corps like yourselves a grace period to meet this. And so certified B Corps would meet FR 1.2 by year 3, not year 0. And so let's talk a little bit about the intent behind FR 1.2. We want to ensure that B Corps do not undermine the B Lab theory of change. Ultimately, we want to exclude industries with systemic negative social or environmental impacts. And this is based on secondary research from credible sources like the World Bank or the European Investment Bank. And we recognize that in generally all cases, individual companies cannot remediate some of the systemic negative impacts of these industries. And so let's go through the compliance criteria. First, FR 1.2.1, the company generates less than 1% of annual revenue from causing or contributing to the impacts on stakeholders in these industries listed below. So fossil fuels producers, gambling, pornography, prisons and detention centers, tobacco, and weapons. Then in FR 1.2.2, if a company generates more than 1% of revenue from being linked to the impacts on stakeholders in those industries mentioned previously, then companies must publicly report this, and they're still eligible for certification with that disclosure. And then the last compliance criteria is around, as mentioned previously, B Corps have a grace period to meet FR 1.2, and so B Corps have to do so by year 3, not year 0. And so on the bottom here, there is a link to a knowledge base article that explains some of these terms like causing, contributing, linked in more detail, because we do use these terms in the V1.6 of the standards. That said, we have heard stakeholder feedback that these terms can feel a little opaque or confusing, and we definitely want to provide more clarity to you all. And so we've created a list of questions that hopefully makes the logic and the decision tree a little clearer. And the good news is that in the new setup, these questions are all built into the B impact assessment. So you'll see the question, you can select yes or no, and then the assessment will automatically bring you along the correct pathway. And so we'll go through the questions together now. And then in a few minutes, we'll also have some case studies to apply these questions to example companies and bring them to life a little more. And so first, let's talk about causing. And so to determine if your company is causing the negative impacts in the industries mentioned previously, what you can ask yourself is, does the company, do we manufacture, grow, wholesale, or retail the product or service? And so if the answer is yes, then the company is causing the negative impact. And so we have some examples here, also in that knowledge base article mentioned earlier. If you're manufacturing cigarettes, if you're operating coal plants, you're actually selling weapons, these would all be examples of causing the negative impacts in those industries. Then we have contributing. And so for contributing, the main questions to ask would be, does the company sell products or services that aim to increase profits or improve public perceptions of the industry or the client in the industry that they're selling to? And so some examples of this would be let's say there's an investment fund and they're investing in a prison, or there's a marketing company that creates advertisements for a gambling client, or a consulting company advises a tobacco client on how to sell new products or expand to new markets. Those would all be examples of a company working with their client to increase profits or improve public perceptions of their client or their client's industry. The next question to ask for contributing would be, does the company sell products or services that are tailored for the industry and relate to the industry's negative impact? So it's used in the manufacturing or sale or use of the product in the controversial industry. And so examples of this would be a manufacturing company selling drilling equipment to a fossil fuels client, a construction company actually building the gas stations that the fossil fuels are sold out of, or an engineering company advising a weapons client on weapons design. And so those would all be examples of companies contributing to the negative impacts of the fossil fuels or the weapons industry. And so lastly, we have linked. So the two questions to ask would be, does the company sell products or services that are tailored for the industry or client, but are not included within the contributing directly related to the negative impact that we just discussed on the previous slide? Or does the company sell products or services that are not available to the general public? And so if the answer to one or both of these questions is yes, then that means the company is linked to the negative impact. So examples of companies linked to the negative impacts of the industry would be a human resources company selling employee training software to a pornography client, or an accounting company preparing financial service statements for a prison client. And so, yeah, we've talked a little bit about some of the explanations and kind of logic questions to ask yourself for cause and contributing and linked. Those are all in that knowledge base article. If you want to revisit it, we'll also do some fun case studies. And then also in that knowledge base article is this summary table that summarizes if my company is causing, contributing, or linked to the ineligible or controversial industries, then what is the outcome? And so you can see based on the scope and what the relationship of the company is to the controversial industry. This is a summary of what the outcome would be. And so to bring all of this, I know it's a lot of information, so to bring all of it to life a little bit more, now we're going to move on to a few case studies with some example companies.
Okay, I'm back again, and I'm no longer Austin. Well, I can be Austin, but I am now the CEO of a fake company called Cherish the Moment. I'm in the retail industry, and I sell office furniture such as desks and chairs. I am B Corp certified. And my situation is we've had some major fossil fuel clients engage with us, and they bought 500 desks and chairs for their offices. This was a big order for us and accounted for about 20% of our revenue last year. So, Grace, can you help me understand my situation?
Yes, certainly, Austin from Cherish the Moment. Would love to walk through some of these questions with you and determine if Cherish the Moment is causing, contributing, or linked to the fossil fuels industry. So my first question for you would be, does Cherish the Moment manufacture, wholesale, or retail fossil fuels?
No, yeah, like I said, we only manufacture chairs and sell them to the fossil fuel industry, so no, we don't.
Got it. Okay, so not causing. So let's determine whether or not Cherish the Moment is contributing to the fossil fuels industry. Does Cherish the Moment, when they sell the chairs, do the chairs aim to increase profits or improve public perceptions of their fossil fuels client?
No, yeah, they just use these in their offices, so our product is not aimed to increase their profits.
Understood. Okay, so when Cherish the Moment sells these chairs, are the chairs tailored specifically for the fossil fuels client? And does it relate to the negative impact of the fossil fuels industry? Like, is it used in the sale or the manufacturing of the fossil fuels themselves?
No, it's not tailored. They're the same desks and chairs for any other company outside the fossil fuel industry, so no tailoring to this industry.
Understood. Okay, so the last set of questions is on linked. Does Cherish the Moment, and I think we answered this one already, it overlaps with your previous explanation. Cherish the Moment does not sell chairs that are tailored specifically for the fossil fuels client. So the second question would be, does Cherish the Moment, when they sell these chairs, are the chairs available to the general public?
Uh, they're not. No, our furniture is not tailored for the fossil fuels industry, and it's available to anyone who wants to buy these products. So we don't restrict it to just the fossil fuel clients, right? Anyone can buy these chairs.
Understood. Okay, so we've gone through those questions for causing, contributing, and linked, and you answered no to all of them. And so cherish the moment is not causing, contributing, or linked to the fossil fuels industry. And so for cherish the moment, no further action for you all to meet FR 1.2.
Great. Thank you very much.
Thank you, Austin, from Cherish the Moment. And now we'll have another case study from Pillar Talk.
Hi, everyone. My name is Manuka, and I am the CFO for a company called Pillar Talk. We're a construction company, so we're in the service industry, and we also are a B Corp. We do have involvement in the gambling industry because we build casinos. So we've had a few projects this year, and our most recent fiscal year, the revenue we earned from these projects were about 6% of our total revenue. So Grace, can you help me understand what my outcome might be?
Yes, of course, Manuka from Pillar Talk would love to walk through some of these questions with you. So first, let's think about causing. Does Pillar Talk manufacture, wholesale, or retail gambling products or services?
No, Pillar Talk does not manufacture or sell gambling products.
Understood. Okay, so let's go to contributing then. Does Pillar Talk sell when they're doing the construction? Does this construction aim to like increase profits or improve public perceptions of the gambling clients?
No, good question. Nothing like that. We do not aim to increase profits or improve public perception.
Okay, so let's look at the second question for contributing. Does Pillar Talk, when they're constructing these buildings, constructing these casinos, is this construction tailored specifically for the gambling client? And is it used in the sale of gambling products or services?
Yes, I'm going to have to answer yes to that one. Pillar Talk does construct tailored buildings for casinos, and the buildings are used for the sale of gambling products.
Understood. Okay. So from the information you've given me, it sounds like Pillar Talk is indeed contributing to the gambling industry. As a certified B Corp, Pillar Talk has a grace period to meet FR 1.2. You all should meet FR 1.2 by year 3. And by then, Pillar Talk must reduce their percentage of revenue from contributing to the gambling industry to less than 1%.
Great. Thank you, Grace.
Thank you, Manuka from Pillar Talk. And then we have one last case study here from Absolutely.
Hi, everyone. My name is Zach. I am the CEO of Absolutely. We are a marketing and communications agency that mostly focuses on our local community, but our purpose is really to drive sustainable growth through creative digital marketing. Last year, we had a local client that's in the pornography industry reach out and work with us on a project. It accounted for less than 1% of our revenue, but we're wondering how that might affect our eligibility for B Corp certification.
Understood. Thanks, Zach from Absolutely. Let's go some of these questions together here. So for causing, does Absolutely like manufacture, wholesale, retail, any pornography products or services?
No, we do not make or retail pornography services.
Understood. Okay, let's think about the contributing questions then. When Absolutely is making these advertisements, do these advertisements aim to increase profits or improve public perceptions of the pornography clients?
Yes, definitely. The purpose of the advertisements is to increase the profits for our pornography client.
Okay. And then so when Absolutely sells these advertisements, creates the advertisements, are they tailored specifically for the pornography client? And then is that used in the sale of pornography products or services?
Yes, that's correct. It's tailored for the client and used in the sale of pornography services.
Okay. All right. So I think I have enough information here to understand what Absolutely's outcome would be. So Absolutely is indeed contributing to the negative impacts of the pornography industry. I also heard that Absolutely's percentage of revenue is less than 1%. And so that means Absolutely is currently eligible for B Corp certification. You would just have to ensure that the revenue from contributing to the pornography industry remains less than 1%, in order to continue being certified.
Great, thank you so much.
Yeah, of course. And thanks so much, Zach, Manuka, and Austin for role-playing a little bit with those case studies. And hopefully that was helpful to apply some of these concepts. I know they can feel a little abstract, but hopefully going through the questions, which you can read through on the knowledge base article or go through yourself in the setup, will help make a little more sense of some of these terms. And so for our next section here, I'm going to pass it over to Holly to talk about FR2 on the legal requirement.
Thank you so much, Grace. So Foundation Requirement 2, which stipulates that the company adopts the legal requirement and commits to supporting the B Corp community's collective purpose, should really feel very familiar and reassuring to all the B Corps that are on the line today. Next slide, thanks. So 2.1 requires that all companies adopt the B Corp legal requirement. As a reminder, our legal requirement enshrines social and environmental purpose and stakeholder consideration in the governing documents of a company. The way that is achieved differs depending on where the company is incorporated and what type of legal entity it is. So based on where you are, but also what you are. 2.2, on the other hand, requires all companies to sign our Declaration of Interdependence, which is a collective vision for what this community is trying to do that is honestly increasingly important in our current time. These two requirements might feel very old hat to the B Corps that are on the call today, especially to those companies that have worked with me to pass benefit corporation legislation, like in this photo from the Delaware Public Benefit Corporation effective day way, way back in 2013. But I want to remind you that the legal requirement itself is foundational to what it means to be a B Corp and has been part of the certification since it was first launched almost 20 years ago. It ensures that companies can maintain their mission and continue to have a positive impact on society and the environment through ownership changes, capital raises, and even IPOs. It's about building a company for the long term that is committed to care for people and the planet and protecting that commitment, but also ensuring that we are all accountable to that commitment. And the idea of that commitment and all of our collective purpose is even more important today than it was 20 years ago. So back to you, Grace, for the review of Foundation Requirement 3.
Thank you, Holly. So for Foundation Requirement 3, this is that the company creates a risk profile and meets any additional sub-requirements. And so the intent of FR3 is to align the number of due diligence sub-requirements to the company's risk profile. And also we want to give stakeholders access to the company's public risk profile and therefore increase public accountability. Importantly, FR3 is a bit of an exception in that it does not apply to companies without workers nor micro companies, whereas the other foundation requirements do apply to companies of all sizes. And so let's go through some of the compliance criteria in FR3. So the first one is that the company creates a risk profile using B-Lab's risk tool by answering the 14 questions. And so the risk tool is built into the new setup. And so you can go in and then just answer yes, no to the questions that you'll see there. And we'll also go over the questions in a bit here. The second compliance criteria is that so if for some of the risk tool questions, if you select yes, this may trigger additional impact topic sub-requirements. And so the second compliance criteria is that the company meets any of these additional impact topic sub-requirements. And if any additional sub-requirements are required, these will automatically be added to the company's profile. And the last one is that the company agrees to a summary of the risk profile being displayed on its B Corp public profile. And so this would be kind of similar, or like it is similar to how the disclosure questionnaire for larger companies today is made public on the B Corp profile. It would just be a list of the 14 questions and then a record of whether the company answered yes or no to each of the questions. And really importantly, I know for FR 1.2, we were talking about potential ineligibility for companies if there's material involvement in those industries that undermine the B-Lab theory of change. Whereas in FR3, and a really important distinction is that even if a company answers yes to any of the questions in the risk tool, the company is still eligible for certification as long as they meet any additional sub-requirements. And so this is an example of the risk tool. This is a setup of the new feature you would see. This is a screenshot of the new feature you would see in setup. And so this is just an example of the first question. In the past fiscal year, did your company contract more independent contractors than it has employees? And so for each of the questions, you'll also see an explanation of what the potential negative impact is, as well as the scope of the risk. In this case, the scope is the company's own operations, not necessarily its suppliers, for example. And then so you'd answer yes or no, and then you would see a similar format for the other 13 questions in the risk tool. And so we'll just highlight some of the other questions in the risk tool that you'll see again in that same format that you just saw in the screenshot. So for example, questions around hazardous chemicals, agricultural chemicals, the rights or lands of indigenous peoples, manufacturing using materials from extractive industries, ecosystem conversion, and then there are a few more questions that you can see in that full risk tool as well as in the FR book and body of knowledge. But yeah, this is just a sampling of the types of questions you'd see in the risk tool. And then like Austin mentioned earlier, this is intended to be an updated version in a lot of ways of the disclosure questionnaire. And so you'll likely see some overlapping themes, like questions you saw in the disclosure questionnaire will probably also show up in the risk tool. So let's go through an example case study here together. So thinking about this question, this is a question in the risk tool. Do the company's own operations directly involve ecosystem conversion that could contribute to habitat loss, soil erosion, or loss of biodiversity? And so let's apply this to a theoretical company. There's a medium company on the manufacturing track. And so if this medium company on the manufacturing track answers yes, the company's own operations do involve potential ecosystem conversion of some sort. Then the company is, in addition to all the sub-requirements they already have to meet based on their company size and track, they would also have to meet ESC 2.2 and ESC 4.3. Those are two sub-requirements that focus on the biodiversity impacts a company could have, as well as a plan to mitigate the biodiversity impacts. And then in addition to that, so the manufacturing company on the medium company on the manufacturing track already had to meet ESC 1.7 on an environmental assessment. And so the incremental requirement here is that when the company is doing their environmental assessment, they must consider this potential and in some cases actual negative impact of ecosystem conversion. Yes, and so I think I'll pass it over to Becca.
Thank you so much, Grace. Okay, everyone, take a deep breath with me. Okay, we did it. We covered all of the foundational requirements content. We did say that we would get a little bit into the weeds there, and I think we did. Thank you so much for Holly really grounding us in the foundations of this movement on the legal requirements. Thank you, Austin Grace, for covering so much of that content into what goes into those foundational requirements and sub-requirements. And thank you to our professional actors and role players, Austin, Manuka, and Zach. Excellent job, and the people loved the puns. Okay, we are going to shift gears a little bit now. So we've just done the foundational requirements, which is the more like impact topic, normal type of content. Now what we're shifting into is a little bit about the announcement that you would have just seen in the last 2 weeks around the assurance model and certification process. So first, you're going to hear from Eric about the assurance model and what that process looks like and what it's based on and why this shift is happening. And then Manuka is going to share with us the certification setup process. And then as a reminder, and I see people are already utilizing it, there is time for questions and answers. We have some pre-submitted and then we have some live. So please make sure you're using the Q&A functionality. If you haven't used it yet, there have been a lot of great questions asked. There's even been one question asked where we're asking for a little bit more detail. So if you asked that and you're not seeing your answer, if you could provide us some more detail. And we're excited to try and get to all of your questions. Okay, with that, I will hand it over to Eric.
Hi, folks. Very nice to be with you all. Thanks for joining. My name is Eric Kivimaki, and I'm representing the Certification Program Development Function at B Lab Global. And what we've been working on for the past year or so is really developing the new assurance model for V2.1 of the standards. It does look a little bit different to V1.6, which you're all used to. But having said that, the overarching experience is going to feel somewhat similar in terms of the phases that you go through. So what I'll do over the next few slides is talk about some high level information as to why are we doing this, what does it look like, and then we'll end on some details around nonconformities and what to do if a certain sub-requirement is feeling a little bit unattainable at the first bite of the apple. So the new assurance model that we've developed for V2.1 is based off of a industry recognized ISO standard. Now that's 17021, which is the management systems standard, and we will be doing the auditing via third-party assurance providers that are accredited to this standard. So previously, we had developed everything in-house. We had used in-house auditors and close partners, but we're taking that a step further by following these industry-aligned standards and going through accredited third-party assurance providers. Next slide. So what's the reason for the change? The change is coming from two main areas. One is we want to support our movement to be compliant with upcoming legislation in the European Union. This ECGT legislation is the Empowering Consumers for the Green Transition, which is focused in the EU, but does affect companies selling into the EU. So this legislation aims to tighten up sustainability certifications to ensure that the claims being made by these certifications are really meaningful. Beyond that, we do want to align further with industry best practices within the sustainability certification and assurance sectors more generally. And that typically uses these industry recognized standards as well as third-party auditing partners. Next slide. So let's start with the similarities. At a high level, the experience for companies across V1.6 and 2.1 is going to feel pretty similar. Companies will be expected to provide information about their business to confirm eligibility, the scope that the certification covers and that the audit covers, as well as the assessment track itself. As you might expect, you'll be completing a self-assessment and uploading evidence to demonstrate compliance across the sub-requirements. Once that's completed and you feel ready to participate in an audit, you'll be connected with one of these third-party assurance providers to interact with one of their auditors during the audit phase. At the end of the audit, you'll be issued an audit report that'll detail the level of compliance as well as a certification decision as a part of it. It's inevitable that there will be some nonconformities, as we call them, areas where sub-requirements are not fully met by companies for one reason or another. And so then, depending on the nature of this nonconformities, there's a remediation period, which is currently today called the improvement phase. So to allow that certification decision to be issued. And then after that, companies will recertify on differing audit cycles. Next slide. So the differences that you all will experience are the following. So on version 1.6, auditors were auditing a sample of the questions across governance, workers, community, and the environment. Auditors were selecting those questions based on the score that was generated from those questions, as well as the nature of the risk that those specific questions were calling out for a company in a specific context. In 2.1, we will be auditing against all sub-requirements. So the number of sub-requirements is less than the number of questions in V1.6, but we'll be auditing against all of them. Companies of different sizes will also experience a different frequency of audits. So the audit cycle for companies of different sizes will be different. Smaller companies will have fewer audits. Our largest companies will have annual audits. And there will be on-sites that will also be determined based on company size and sector. What's key to note about this is B Lab no longer retains the certification decision. And this is a key part of moving towards a third-party assurance model. This creates a healthy independence of the certification decision from the organization B Lab Global that is issuing the standard itself. So once the audit is completed, that certification decision will be issued by the assurance provider. Next slide. So we talked about a few of the steps of this process. This has a little bit more detail that's outlined in these 10 steps here. So we start with registration. Grace and Austin talked about the foundation requirements. We will then do a scoping exercise to determine if a company has subsidiaries or multiple sites across the region or the world, to really determine how far are we measuring the company's impact and doing the audit. Once that scoping has been determined, it will generate a self-assessment that's appropriate for the size of the scoping exercise and the company in question. Once the self-assessment is completed and evidence has been provided, and you feel ready for the audit, we'll connect you with that third-party assurance provider. The audit will be scheduled. You'll discuss the audit plan with the assurance provider. You'll participate in the audit, exchange documents, follow-up questions, something very similar to what you're used to right now. And then you'll receive the report listing the nonconformities, if there are any. We've already done some pilot tests with companies, and we were pleasantly surprised that some of them did not have any nonconformities. So we feel pretty good about attainability at this point. If there are nonconformities, the company will have a period of time to address those. We'll talk about those in the next few slides. But once those most significant nonconformities are addressed, a certification decision will be issued. And then, as I mentioned before, you'll based on your company size, you'll return for subsequent audits for recertification. Next slide. So nonconformities. At a high level, it is simply stated as where a sub-requirement is not met. There are lots of reasons why a sub-requirement might not be met, and they'll be classified as either a minor or a major nonconformity. A minor nonconformity, as it is sort of suggested by the name, is a little bit of a slight deviation from the sub-requirement. Maybe there is one site or one facility that might not have fully implemented a specific business practice that might be expected by the sub-requirement. A major nonconformity, on the other hand, might be the total absence of a type of systemic management of a business practice or business impact that really permeates its way throughout the business. It also a major nonconformity might be raised if a specific topic or issue or scenario is posing significant risk to the stakeholders of the business. Next slide. So what happens when nonconformities are raised? We expect this to happen for a lot of companies. It's only natural. The standards are brand new. We're all getting used to them. Once nonconformities will be issued, the company will be asked to develop a corrective action plan. So what this means is identifying the root cause of the nonconformity itself, actions taken to remediate it, and actions to be taken in the future to further remediate it completely and to prevent it happening again. This is not meant to be a scary exercise. It's meant to be a learning exercise to help companies really align with the standards over the long term. As far as the details, major nonconformities must be remediated within 6 months of the audit being completed. And major nonconformities must be remediated prior to a positive recertification or certification decision being issued. Having said that, we have more flexibility with minor nonconformities. They must be remediated by the time of the next audit. So whether that's in year 3 for a smaller business or the next year for some of our larger businesses. Minor nonconformities do not prevent a positive certification decision from being issued. So said more simply, you can have open minors moving through your first audit into the next cycle. And there's no cap on the number of minor nonconformities. We're really focused on those major nonconformities that present more risk to our stakeholders. Next slide. Oh, I'm going to actually pass off to Manuka. Thank you.
Hello, everyone. Manuka again, the CFO of Pillar Talk, but I also work for B Lab US and Canada. And I'm going to talk to you a bit about the certification setup process. So what is the certification setup? The certification setup is a step that all companies will complete in order to submit for their certification. Why did we create this tool? We did this so you and us can confirm eligibility, scope of your certification, track, and the legal requirements for your company very early on in your certification journey. And completing the setup generates a unique self-assessment for your company's size and sector. So a big question on this is when to complete your certification setup, and I find it's easier to explain with an example. So if you have a 2026 recertification date, we recommend you do setup as soon as possible. But let's say you have a 2027 or 2028 recertification date, you can do it now to get a tailored self-assessment, or you can wait and do it 12 months before your recertification date. Without doing the setup, your assessment will be an estimate on your size and sector from your last certification. But in order to get a precise, tailored self-assessment, you'll have to complete certification setup first. So to navigate to this certification setup, go to your home page on your assessment, and you'll click the Get Started button to set up your assessment to start your certification journey. So that's the first step. Then once you do that, you've kind of like activated the setup. So then you can go to the tab that says Certify and then click Setup, which will live under that tab. And you'll be brought to a page that has 4 sections. So the first step is to just gather your documents to get prepared to complete the certification setup process. So it's just telling you to like collect your org chart, your human resource documents, have everything ready so you can complete certification setup successfully. The next section is the eligibility section. And this is where we check your ownership type to ensure that it is eligible for certification. The next section is to identify any related entities. And Eric spoke about this a little bit before about like the scope. So this will help us determine which entities should be included in the certification and which entities within your org chart should complete the legal requirement. I also want to mention during this section, you might get paused and gated out for a human review. It's not anything bad. It's just that you're going to be connected with someone from B Lab just to help make sure that we're capturing your structure correctly and helping you meet the requirements based off your company. And then the last section is to customize your assessment. So this is how you get like a tailored assessment. This is done by asking questions to identify your size, sector, and market to determine the right track and again to customize your assessment. So once you've completed all 4 of those sections, you'll see that little green complete button next to the complete mark next to each section. But I want to emphasize that it's very important to click the green submit button once all those sections are complete. So you must submit your setup once it's all complete. Don't forget that step. And with all that, I am going to pass it on to Zach for some Q&A.
Wonderful. Thank you so much, Manuka. So we have a couple of pre-submitted questions that we're going to go through first. If you have any questions that you want to have answered as well, please submit them and we might answer them live as well. You can submit them using the Q&A function and we'll take a look at those after we go through the pre-submitted ones. So the first pre-submitted question that we got says, FR 1.5 says I must be transparent about my performance. How much should I expect to make public? And I'm going to pass it over to Grace to talk about this one.
Thanks, Zach. So for this question on FR 1.5, there are some ongoing discussions, but what we can share now is that we do anticipate that this new or updated B Corp profile will have a similar level of transparency to your current B Corp profile, so there should be a lot of familiarity there. So it'll include basic company details like location, industry, website, like when the company was certified initially, as well as any disclosures related to the standards. And so, yeah, we'll reach back out with more updates as some of these details are finalized.
Wonderful. Thank you so much. The next pre-submitted question that we got is related to FR 1.2. The question says, for FR 1.2, B-Lab has outlined different levels of involvement that a company can have with industries that undermine B-Lab's theory of change. Companies can be designated to be causing, contributing, or linked to a particular industry. How do I determine which level applies to my company's involvement with these industries? Will B-Lab review and tell me? And I'm going to pass it back over to Grace to answer this one as well.
Thanks, Zach. Yes, I hear some of the confusion on causing, contributing, or linked. I'm hopeful that with some of the information we shared in the slides previously, as well as the case studies that we went through, hopefully that adds some clarity to what the different definitions are and how to determine to what extent you could be linked to one of those industries in FR 1.2. And then, yes, there's that knowledge base article you can reference after the call as well. And then ultimately, if you have any follow-up questions, you can ask now or reach out later in an email. We're available to help. On the second question will be lab review and tell me, so kind of the assurance process for the foundation requirements. While there are also ongoing discussions on that, what we do know is that B Lab will be reviewing companies against the foundation requirements versus, as Eric was mentioning previously, for the impact topics, those would be assured by a third-party assurance provider. But for the foundation requirements, that work will be led by B Lab. And so what we are hoping is that in the new setup, there are a lot of questions that companies can go through themselves, and they're like guidance and like help materials linked to each of the questions. And so that's all built into the B Impact assessment. So companies can do a lot of self-assessment themselves. But then ultimately companies can definitely ask questions to B Lab as needed.
Wonderful. Thanks again so much, Grace. And then there's one last question that was pre-submitted. It says, let's see. Are we on the next slide? Sorry. Oh, no. My screen just disappeared. Okay, perfect. It says, why are there inconsistencies between the 1% and 5% thresholds in controversial industry criteria, the PDF versus the risk profile? And what we're seeing here, just I'll take this question. The difference in thresholds correlates to the difference between FR 1.2 and FR 3.1. So for the first one, FR 1.2, that's related to the ineligible industries. And there is a 1% revenue threshold for companies to be eligible for B Corp certification for FR 1.2. If a company is earning greater than 1% of revenue from causing or contributing to the 6 industries that we discussed earlier in the presentation, they will be ineligible for B Corp certification. But to note, existing B Corps have until year 3 to comply with this requirement, whereas new companies must comply with it in year 0. And then FR 3.1 is the risk profile. And I should note that it's not a flat 5% for all of the risk profile questions, but the percentages are different than the 1% that you see in FR 1.2. So companies that are earning the percent of revenue specified for the FR 3.1 questions might have to complete additional sub-requirements, and will also have to publish a risk profile on their B Corp profile, which we discussed a bit earlier as well. Perfect. So now I think we have some time for live Q&A. Let me see. We have a couple of questions that, of course, we've already been answering throughout the session. But I'm taking a look at the questions that are open right now as well. This might be a good question for Eric, possibly. There's a question here that says, I haven't gotten into the platform yet, but for the requirements and sub-requirements, is there any nuance answers beyond yes and no? For instance, if a company does 5 out of the 7 sub-requirements, is there a partial answer? Would you feel comfortable taking that on, Eric? I, I think you're muted. Sorry.
Sorry about that. And then I couldn't find my mouse and, Anyway, It is more of a yes, no on the compliance side. So we encourage companies to really take am I fulfilling the sub requirement as a whole when answering that question? Having said that, we do have some sub requirements that provide optionality. You could do one of several actions in order to be compliant with it. But having said that, we would encourage a sort of a fairly pragmatic approach, and is the company fulfilling a sub requirement? Having said that, we can work with uh, account managers and other support mechanisms provided through the global partner to further understand the sub requirement in question and whether or not you would be meeting that sub requirement.
Thank you so much, Eric. There's one question that was submitted a bit earlier and that I believe Grace had replied to via text, but I think it might be helpful just to pull it out because I think it's a question that I receive quite often. The question was from Maria, and it said, for the foundation requirements, am I understanding correctly that if your wholesale, retail, and your own operations are not directly contributing to biodiversity habitat loss, so this is related to the risk profile, it's not applicable, even if you have suppliers and manufacturers that could potentially fall into that category? Would you feel comfortable talking a bit about like the difference between when it comes to the risk profile, a company's own operations, and those of suppliers, and how that relates to the risk profile questions?
Yes, certainly. So for each of the questions, for the risk tool that's then showed on the risk profile, there are like when you look at it in the assessment, there will be a line that explains what the scope of the question is. And I think for basically all of the questions that you'll see, the scope is always the company's own operations. I would need to confirm, but that's like generally the case throughout the questions. And so, yes, and specifically for that ecosystem conversion question, the scope is only the company's own operations. So you'd only answer yes if your company's own operations have potential or actual impact around ecosystem conversion.
Wonderful. Okay. Taking a look as well. So I think that's all we'll do for live Q&A right now. I see there's a couple more questions that are in the chat, and we'll make sure to respond to those via text, and we'll send out a document of the Q&A that was submitted as well at the end of this call. So thank you all for submitting your Q&A. Thank you to our panelists for responding as well. And I'll pass it over to Becca for closing remarks.
Thanks, Zach. Okay, everyone. Well done. Thank you for showing up, and thank you to our speakers. So thank you so much to Grace, Austin, Holly, Eric, Manuka. Austin, thank you for coordinating on the Q&A. There was a lot coming in at once. So really, really appreciate you and bringing all of your wisdom. And people loved the case studies. So note to self, continue to do role play acting. I also want to thank everyone here, all the B Corp employees who showed up today. I know that you have a lot going on in your full-time roles, in your jobs, and you're taking the time to dedicate to starting this learning process. And as we said at the start of the call, there's a lot of content in this, but there's also a lot of content that would allow you to go in deeper because we could only do so much in about an hour. So I'm very grateful for you all to taking the time to commit to engaging in this and showing up live today. But I do want to share some next steps for you all. First, and I know I've talked about it a lot and I even put in the chat, there are immersion courses available to you all. This is personally how I've been learning about the standards. So B Lab Global has created these. I find them very engaging. Am I biased? Yes, I am. But I think that they're really fun and exciting, and they make the content a lot more absorbable than a long PDF. For me personally, I enjoyed it, and I highly recommend you check them out. A special shout out to the fact that we've just added in the climate action immersion course. So please send them out. And then I also think there's always fun ways to engage. I saw someone talk about how they have a lot of team members who also work on the standard. It could be a fun little team bonding activity. Just saying, again, I'm biased. I think they're really fun. So consider taking those immersion courses. If you haven't already, join the New Standards Beehive group. We'll send the link to that in the chat. It's the perfect place to send additional questions. We also send updates and announcements in that channel. So especially if you are maybe the beekeeper of your team and you start to go through this, you'd probably find some like-minded B Corp community souls that would also be wondering about the same thing. So I encourage you to use that channel to both hear from other B Corps and also get some updates from B Lab in there. Beyond the immersion courses, which again you can find, and we'll send links after the call, but they're also in the Beehive. But beyond the immersion courses on the Beehive, there are so many resources that the team has been creating for you. Special shout out to Jamie. She's been creating these amazing case studies from other B Corps and the work they're doing on these specific impact topics. So take some time to dig around in the Beehive and really absorb all there is that exists for you. I highly recommend that. It's a fun place to find more tidbits of information. There's an especially important resource that I think is the perfect next step after today, and it's called the Certification Process Requirement Guide. The link we're sending in the chat will send you to all the different languages we have available. Just click into the language that suits your needs, and you can see a lot of information on that certification process. And then finally, 2025, as we said, we had this Impact Collab series. Today is the last of its kind. We were so excited to dive in with you all on this content. And next year, we have a lot of fun plans as well. So next year, you can look out for study halls, which we plan to host for the community to come together and dive into a lot of this content, ask questions, connect with one another. We will also be publishing a lot of guides, some templates, and more case studies. And again, if you're interested, if you think your company has a case study we can share, we want to hear from you. Get in touch with us because we want to uplift your amazing work. And we're excited to publish it out to the whole B Corp community, but also even more broadly because we are inspiring the greater business world. We are also excited to be piloting with some regional workshops next year. And then, of course, if you haven't already heard, we are hosting Champions Retreat in April of next year. It'll be in Milwaukee, the Great Lakes regions. And we're going to be having a lot of amazing content on the new standards, on the state of the business world and what impact looks like in this moment. Be sure not to miss it. It's my favorite conference I've ever been to. Again, I am biased, I understand that, but you meet a lot of wonderful souls and you walk away with a lot of amazing content and find your community. And then of course, we can't wait for the B Locals, our amazing volunteers in the community who are putting on builds next year. So that's just some tidbits, some spoilers, some trailers about what might be happening next year. And we can't wait to share more with you and continue to engage with you on these new impact topics and the standards V 2.1. Okay, so big thank you again to all our speakers, and even bigger thank you to all of you who chose to show up today. That's it. That's all I have to say. Welcome, everyone. Hello. My name is Becca, and I use she, her pronouns. I'm one of the associate directors on the Community Success and Engagement team here at B Lab US in Canada. And I am thrilled to welcome you all to today's Impact Collab, which is on foundational requirements and certification next steps. So first, I want to cover some quick housekeeping before we begin. Closed captioning is available on the call, and you can control this and how it appears on your screen by clicking on the CC button in your Zoom control bar. We will be recording today's call, and we'll be sharing that recording in the follow-up email and also uploading it into the Beehive after today's call. And then finally, if you would like, please update your name in Zoom to have your name, your company name, and the pronouns if you'd like. Before we get into today's content, even though we are all dialing in virtually, it's important for us to acknowledge and honor the ongoing stewardship of this land by Indigenous peoples. We have much to learn from Indigenous communities that have lived on this land since time immemorial. I personally reside on Lenape land, and I encourage you to share in the chat whose territory you're joining from. As you may know, today's webinar is one in a series of Impact Collabs where we covered each of the new impact topics from B Lab Standards V 2.1. And this is the final Impact Collab of the year. Yay, celebration. I'm curious in the chat if anyone has happened to attend all of them, because then you are an absolute all-star. But also, do not worry if you are new to the party. We're excited to have you here. And you can find all of the recordings and resources from previous calls in the Beehive or on YouTube. We also have immersion courses on every other impact topic, and we encourage you to take those to go deeper at your own pace. And we'll send links to those in the follow-up email after the call. Okay, so we do have a lot to cover today, but I want to quickly review how we'll be spending our time together. So we're going to start with an overview of the foundational requirements from Austin, Holly, and Grace. Then we're going to shift to hear from Eric on the assurance model. And then Manuka is going to share with us the setup process, the certification setup process. And then we're going to go into Q&A. That'll be at about the hour mark, just for everyone to have time awareness of how today will go. And please make sure you submit your questions in the Q&A function on Zoom. And then I'll close us out with some quick reminders of resources and some calls to action. And our goal today is to do an overview of the foundational requirements, the assurance process, the assurance model, and the setup process. And we'll begin answering some general questions.